Hello everyone. Many candidates do not pursue classes for level 1 of CFA curriculum, but there is one topic where they face challenge in understanding it, and that topic is alternative investments. Here are the things you should know about this topic. If you know these topics, then you can manage it very well in exam as well as in your work. So you should know what is alternative investment and how it is different from traditional investment. The categories of alternative investments are hedge funds, private capital, which includes private equity and private debt, real estate, natural resources like commodities, farmland, and timberland, infrastructure such as roads, airports. So, how one can invest in alternative investment, either by way of direct investing or by way of fund investing. The most often structure found in alternative investment is limited partnerships. So you need to know the concept of general partner, who is the fund manager, and limited partners, who are investors. What are the compensation involved in alternative investment? That is the fees. So there is management fees, which is computed as percentage of asset under management. There is incentive fees, which is usually a percentage of profits. You also need to know the concept of hurdle rate, which must be exceeded before incentive fees are paid, the concept of high watermark and clawback provision. You also need to know what are the risk exposure in alternative investment when you compare it with traditional investment like equity, bonds, etc. And what are the issues in performance appraisal of alternative investments and how to calculate the management fees and incentive fees. One of the alternative investment product is private equity, which has some concept of leverage buyouts like management buyouts, management buy-ins, venture capital funds, which is different stage of development like formative stage, later stage investment, mezzanine stage. What are the private exit strategies like trade sale, IPO, recapitalization, secondary sale, write-off or liquidation? What are the potential benefits and risks of private equity? Apart from private equity, there is a concept of private debt, which refers to lending to private entities. Next category of alternative investment is real estate. So you need to know what are the characteristics of real estate. A residential property is considered as a direct investment in real estate. Commercial real estate properties generate income from rents. There is concept of REITs, which issues shares that trade publicly like equity stocks. There is concept of mortgage-backed securities, where underlying pool is mortgage loan. How performance measurement is done in real estate, the concept of appraisal index, repeat sales index, REIT indices. You must know what are the correlation between REIT index returns and global equity returns and correlation of REIT index returns with global bond returns. Next category is infrastructure investments, which includes transportation assets such as roads, airports, ports, railways. One category is brownfield investments, which has stable cash flows and relatively high yields. Other category is greenfield investments, which has more uncertain cash flows, relatively lower yields, but offers growth potential. Next category of alternative investment is commodities such as gold. In commodities, returns are based on price changes and not on income streams. The exposure to commodity prices is mostly achieved with derivatives like futures, forwards, options, and swaps, which are all available forms of commodity derivatives. The other methods of exposure to commodities are commodity ETFs, managed with future funds, You need to know how commodity valuation is done, where future price is computed based on spot price multiplied by 1 plus risk-free rate, as there is storage involved for commodity, so storage cost is added, and an investor derives convenience from investing in commodity, so convenience yield is deducted. The convenience yield helps you to determine the concept of contango and backwardation. You need to know what is the correlation of commodity returns with those of global equities and global bonds. The other categories of natural resource are farmland and timberland apart from commodities. Next important category is hedge funds. You need to know what are the characteristics of hedge funds, the concept of lockup period, fund of funds. There are various hedge fund strategies like event driven strategies, relative value strategies, macro strategies, equity hedge fund strategies. You need to know correlation of hedge fund with global equity returns, the concept of survivorship bias and backfill bias you must know. Still, if you have any query, please comment on this video. Thank you.